Welcome to CrushTheStreet.com's weekly market wrap-up. Let's start things off in the equity sector, where it was all about the impending fiscal cliff. I can pretty much end the discussion here, since nearly every sector has felt the pain in some form or another. The major indexes were all down today, albeit slightly, as much of the downside was recognized on Tuesday and Wednesday. Taking a quick look at the Dow Jones, you can see that it's been an avalanche of selling pressure ever since the Dow Bulls attempted to charge at the key 13,000 level on Tuesday and failed to secure it. Of course, everything will be affected if Congress does not act in time by the end of year deadline. And one of the major talking points today was real estate. So what's at stake? The mortgage deduction tax write-off for millions of homeowners. Will it just affect the rich, who basically hide their gains in nonprofit corporations, or will it affect the entire spectrum? That was a question posed by Yahoo Finance in their informal poll. The majority answer wasn't surprising, which was keep it, since those deductions represent probably the biggest incentive for home ownership. When you look at real estate from a top-down perspective, which is to say bringing into consideration flat incomes and rising inflation, the price of home ownership is extremely steep even in this apparent bear market. So what's the government solution? We'll give you a very enticing tax deduction incentive, and if you take that away, I'd rather be a renter. But the real kicker is that apparently 26% of participants believe that we're all responsible for our nation's financial situation. And to that, I respond with this. I never signed on for indefinite warfare, for an escalation of useless bureaucracies, for the systemic erosion of civil liberties and human dignity. No, your toxic assets, your leveraged derivatives, your bridges to nowhere, that, my friend, is all yours. I ain't responsible for jack crap. Now, I can say a lot more, but this is a family show, so with that, let's talk about something that should be in every family's portfolio: gold. Actually, check that. I'm going to talk about silver today, since realistically, there's probably not going to be as much upside to gold as there potentially will be for silver within this year. Here's the latest technical chart, and the main takeaway here is that the market participants have clearly rejected the notion of $30 silver, as the November 2nd sell-off was immediately followed by a push into $32 territory. Also, where we are now represents a 61.8% Fibonacci retracement of the August rally, so we're clearly on some important support levels. Of course, the first line of significant resistance will be at 33.20, where the 50-day moving average currently sits. I believe we will get there soon, but it might be a choppy road ahead, as the ADX indicator at the bottom of the chart indicates that the price action is not trending in any direction. However, the MACD is turning positive, and the volume has noticeably increased over the average level for the month of October. Theoretically, this means more buyers and sellers are willing to participate at these price levels, and that most of the weak hands have exited the market. Now, the wild card is going to be the US dollar index. Taking a look at this chart, it kind of looks familiar to you, doesn't it? It looks like the price action for silver immediately after the announcement of QE3. And take a look at the November 2nd session. This, of course, was the major sell-off day, which of course meant a huge upswing for the dollar. It's almost like a reverse QE3, one that benefits fiat currencies. But as with silver, the price action after November 2nd is very pensive and unsure, especially for this week's trend. A long series of doji stars, which, as you may recall, represent hesitancy amongst bulls to drive prices higher, and especially coming off of a major rally, doji stars are often a harbinger of an impending reversal. If these recent developments play out logically, it would suggest that silver is poised for a major breakout move, and that would also coincide with price forecasts issued by experts such as David Morgan and Paul Mladenovic. And that will do it for this edition. Thanks for watching, and we'll see you next week.
For more unconventional ideas, please visit CrushTheStreet.com.